If you earned $100,000 last year, you likely paid around 20% of it to the government in taxes. But if you were Jeff Bezos or Elon Musk, there is a very real chance you paid absolutely nothing at all. This isn't about hiding money in offshore accounts or breaking the law. It is about a legal strategy so effective that it is essentially a cheat code for the ultra wealthy. It's called buy, borrow, die. To understand how this works, you have to stop thinking about income the way you do. You get a paycheck. That money is taxed the moment it hits your bank account. You pay income tax, payroll tax, and social security tax. It is a slow, steady drain on your wealth. Billionaires don't work like that. They don't actually earn a salary in the way you define it. When you own a massive portion of a company, your wealth isn't sitting in a savings account, it's tied up in stock. Here is the kicker. You are only taxed on realized gains. That means if you buy a share of stock for $1 and it grows to be worth $1,000, you owe zero taxes on that $999 of profit, as long as you don't sell the stock. This is the buy part of the strategy. The ultra wealthy accumulate assets that appreciate in value. They hold them for years or even decades because they never sell. The taxman has nothing to collect. Their net worth explodes on paper, but their taxable income remains near zero. But a billionaire still needs to eat. They need to buy yachts, mansions, and private jets. This is where the second step, the borrow, kicks in. Instead of selling their stock to pay for their lifestyle, the ultra wealthy go to a bank. They say, I have $1 billion in Tesla stock. Lend me $50 million in cash. The bank is happy to do this. The stock is perfect collateral. Because it is a loan, not a paycheck, the IRS doesn't consider it taxable income. You don't pay income tax on debt. It is literally impossible to tax money that someone has to pay back. So the billionaire gets $50 million in tax-free cash. They use a tiny fraction of that money to pay the interest on the loan, which is usually at a very low rate, and they live like royalty. They aren't earning money, so they aren't paying income tax. They are just living off debt backed by assets that continue to grow in value. Now, you might be asking, what happens when the bill comes due? This leads us to the final and most brilliant part of the strategy: die. Under the current United States tax code, there is a concept called step up in basis. This is the ultimate loophole. When you die, your assets are passed on to your heirs. At the moment of your death, the cost basis of those assets, the original price you paid for them, is reset to their current market value. Let's say you bought that stock for $1 and it is worth $1,000 when you die. All of that $999 of profit effectively vanishes for tax purposes. Your heirs inherit the stock at the new $1,000 valuation. They can then sell the stock, pay zero capital gains tax, and use that money to pay off the bank loan you took out decades ago. The debt is settled, the taxes were never paid, and the cycle repeats for the next generation. This isn't a secret plan hidden in a dark basement. It is written plainly in the Internal Revenue Code. Section 1014 is the reason the wealthy can pass on billions without ever triggering the massive tax bills that would bankrupt a middle-class family. In 2021, ProPublica obtained internal IRS data showing that the 25 richest Americans paid a true tax rate of just 3.4%. That is a lower rate than the average firefighter, teacher, or nurse. It is easy to call this unfair. It is easy to label it a moral failure. But from the perspective of the tax code, it is simply high-level financial engineering. The system was designed to encourage investment, and the people who built the system are the ones who benefit from it most. When you look at a billionaire, you aren't looking at someone who is just good at business. You are looking at someone who has opted out of the tax system entirely. Is the tax system a ladder for the economy, or is it a barrier that keeps the wealthy in a permanent tax-exempt class? If we continue to allow assets to grow, borrow, and pass on without ever triggering a taxable event, the gap between the ultra-wealthy and everyone else won't just grow, it will become permanent. The strategy of buy, borrow, die relies on the assumption that the rules will never change. But as more people understand how the game is rigged, the question isn't whether the system is broken. The question is who has the power to fix it, and more importantly, do they want to?